How do you make money in the stock market knowing that the tariffs are still on their way? Here's the thing, and I broke this down in my previous video regarding oil, and I want to talk about oil a little more with what's going on, the reality behind the tariffs. The tariffs are still on, they're just paused for 30 days. They will happen, and here's the reason why. When you break it down, you could see moving forward that the market will shift. Even over the weekend when we had the announcement for the tariffs, there was a huge shift come Monday morning. Then, of course, we got the pause. That pause, 30 days, down to 29, 28, whatever it may be. They are coming. You see, after Trump's first presidency, Jared Kushner, his son-in-law, got an investment of some $3 billion. $2 billion came from Saudi Arabia, $1 billion came from UAE, and another billion came from Qatar. All right, so what is this investment? First and foremost, Jared Kushner is not very well known as being a very savvy investor when it comes to real estate. But this is a private equity deal, which who knows what that could mean. What we're seeing is a shift. Canada has flooded the United States with inexpensive, easily accessible, and quality oil. This has gotten rid of Saudi Arabia and OPEC inside the world's biggest marketplace for oil. Saudi Arabia doesn't really like that. So what did Donald Trump just do with these tariffs? While it's a 25% tariff across the board on all things, he bumped energy prices up 10%, which is just enough where the Saudis can start selling more and more oil inside the United States. So Trump has artificially pushed the value of oil higher. Given that, if you do want to make money in the stock market, first, I am going to talk about oil again. I just talked about it on Monday. But what I want to talk about today is UUP ETF. This is the US dollar. For those who are not FX savvy, I was an FX hedge fund manager. And so that's where my foundation comes from. So I know FX in and out. I did it for about 25 years. Given that, moving forward, looking at this, the dollar, which UUP would be a way to take advantage of the dollar moving higher, which is sliding a little bit right now, the dollar will move higher once these tariffs are in fact on. Oil prices will move higher. The Canadian dollar is going to fall. Same with other countries. One of the things that's going to push it up, the US 10-year Treasury, which will spike higher, which it did on Monday as well. Let's jump in. I'll break everything down. This chart here tells the whole story. And it took me a while over the weekend to kind of break everything down. I saw a couple videos. There's a guy by the name of Christopher, and I want to say his last name is Grant, but I know that's not correct. And he really kind of triggered it for me because he broke down Canada and kept saying, he's an economist, he's a professor somewhere, and he kept saying, why Canada? This just does not make sense. And at the same time, I had been looking at what the effects of Canadian oil prices moving higher be. And then I put two and two together, that it had nothing to do with a trade war with Canada. And then you look at this chart. The yellow chart, as you can see, since 1990, actually going all the way back to about 1980, Canadian oil imports into the United States continually rose. Then you see OPEC and other Persian Gulf countries. That's 2008 when we saw that drop lower. After the financial crisis, Saudi Arabia and the Persian Gulf never really recovered their peaks with imports into the United States. Simultaneously, of course, the United States itself went through a big fracking transition during that same period of time, so there wasn't the need. Saudi Arabia's oil itself can be replaced. There's other qualities that are helpful here in the United States. And so what we see is Canada effectively has just taken over the market. OPEC and Persian Gulf oil imports have declined significantly. Saudi Arabia doesn't like that at all. All right. We look further into the deal. That's MBS all the way over on the left-hand side there. We all know who the other two are. Far right, Jared Kushner, son-in-law to Donald Trump. What's going on here? Kushner was actually denied the money, $2 billion from Saudi Arabia, from the board members inside Saudi Arabia to do the lend or to give him the money for the investment. It was MBS who said no, he gets the $2 billion. This was in 2021, shortly after Trump left office. All right. Now, and we don't really solidifiedly know what Kushner's doing with this money, but he got over $3 billion in total. $1 billion from Qatar, $1 billion from UAE. He's probably increased this significantly, especially since Trump has become president. And they're probably dangling a carrot of some sort. I actually don't know, but I'm kind of putting pieces together. Trump is artificially pushing the price of oil higher for Canada so that Saudi oil can be purchased. All right. How does this affect things? Now, this is the US 10-year Treasury yield. And as you can see, the yield is falling. It had spiked up over the weekend, of course. So we're going to talk about UUP ETF, which is the US dollar index. And the US dollar index is the currency itself versus a basket of other currencies. Specifically, Canada's in there, Europe, the Euro's in there, British pound, Japanese yen, Swissy, and Aussie. They're all in there. It's all about the interest rate differentials. Again, I worked in FX for 25 years. All right. That's where I cut my teeth within the markets, and understanding how interest rates moves is what got me buried within the economics of what interest rates each country would have. This is what really drove my education inside markets. Right now we have about I think this is printing 4.42 is the 10-year that the chart you're seeing. This is the yield on the US 10-year Treasury. Nice distance between the 2 and the 20 gives you a good idea as to the health. This is the benchmark investment rate here in the United States. Should you borrow money from anywhere, say a mortgage or anything like this, car loan, this is sort of the benchmark that those loan originators are going to start with and say, how much should we loan this person? This is the benchmark that they're looking at. All right, so it's 4.42. Up in Canada, it's significantly less. And let's say Japan is a perfect example, because we did see a shift in the Japanese yen over recently because of the Bank of Japan moving. Japan effectively had negative interest rates. If you borrowed money, you actually got money back from borrowing because the interest rates were negative. The Bank of Japan didn't want anybody to save anything. They wanted the money to work inside the country. So let's just say you were able to borrow Japanese yen at 0% interest rate. Here in the United States, let's say it's 5% on the 10. All right? There's a differential of 5%. You could borrow from Japan at 0% interest rate, put it in a bank account, and earn 5% here in the United States. You have to sell Japanese yen in order to buy US dollar to transfer that money. FX traders live and die by the interest rates. This is called the carry trade. And the reason why it's called a carry trade is in the FX market, you carry the trade over one day. Then if you're long the higher interest rate level, you get that money, that interest. If you're long the lower interest rate, short the dollar in that instance, what happens is you pay the interest rate. So just being in the FX market on a daily basis, you can carry a trade over and earn interest. It's micro. If it's 5% over a year, it's a portion of that 5% on a daily basis. What happens if the Bank of Japan all of a sudden moves interest rates? The currency market moves because these quantitative traders have positioned interest rates in such a way that they can it's based on what they're borrowing at any particular time. So if the interest rate moves, the currency will fall or rise depending on which side you're playing. So with Canada, we're going to see interest rates moving lower significantly with these tariffs. This is inflationary for the United States, so interest rates are going to spike right back up. It's deflationary for Canada. They're going to see less growth. So the Bank of Canada is going to want to step in, lower interest rates to spur more growth. The opposite is true with the Federal Reserve. They're going to want to raise interest rates in order to slow growth because prices are going to spike up higher for U.S. consumers. So effectively, every time we go to the pump, now the 10% on oil imports is going to be nominal. We're talking a barrel of Canadian oil is trading at 60, it'll be 66, 67 half, something like that. All right, so let's say there's a 1-for-1 ratio. There is not a 1-for-1 ratio, but let's just work with easy numbers to assume something. A 10% conversion at the pump would mean if you're paying $3 a gallon, I actually pay $2.75 right here in New Mexico. We have our own refinery. We're situated right at that corner where Texas and New Mexico, there's tons of oil right there. So New Mexico is actually kind of nice, $2.75. So I'd see a 27.5-cent increase if that ratio held 10%. California gets a lot of oil from somewhere else, but on a relative basis, what are they paying? $6.50 a gallon? That's 65 cents. You're not going to really complain too terribly much. You're just going to say inflation. It's everything. The price of food, you're probably going to complain a great deal about. So that's how that breaks down. The Canadian dollar will continually erode as oil moves higher and higher. Right now, oil itself, the price is sliding more and more because the tariffs are not exactly on. Now, this isn't a one-way bet because as oil prices increase with the economic sort of contraction based on Canada's not buying any U.S.-made products at all, good for you, Canada, because we're basically going to unemploy them so that the Saudis can get more money so that Jared Kushner and the Trump family can get a bigger investment. It's pretty much how that's all working out. Effectively, Trump has found a way to put Americans to work and make a buck indirectly off of it. Okay, I don't make the policies. If you want to make money in the stock market, these are the policies we're dealing with, and I break it down. And I'm going to get mine. I will make that money in this stock market. So USO ETF. This is an easy way for a lot of people to get into the ETFs, into the oil price, and into this trade. This is what's being set up. We will see these tariffs. Oil prices will gradually, systematically move higher and higher and higher. Not a whole lot. Are we going to see 150? Take a look backwards. This chart goes back quite a bit. You can see all the way back, back to 2017, 2020. Of course, we saw prices absolutely collapse for the price of oil based on COVID. But then it's bounced back. Now, however, we're likely to see a big push. We'll probably see 100 in a barrel of oil here in the United States. But it's up to a certain point because we will also see economic contraction. So less demand, supply will build up. OPEC, notorious for cheating, trying to get every penny they possibly can, they will likely contract on a quota basis how much oil they're pumping out somewhat. So I don't see this as a huge, necessarily one-way bet that we're just going to continually see oil prices moving higher and higher. But as we see economic contraction within all the various economies, I see the US dollar moving back upwards. UUP ETF is your target for this. I'm kind of thinking we'll see a continued dip lower to a certain point, and there's going to be a point where you're going to want to buy the US dollar versus other currencies. Now, there are no ETFs, inverse ETFs versus the Canadian dollar. I did look. I know a lot of guys are starting to follow me along because of all my inverse ETF content that I'm putting out there. Unfortunately, I could not find any ETFs in the United States inverse to the Canadian dollar. That's why I'm looking at UUP. we are seeing a dip in the US dollar. All right. Two things. Japan had just lowered or raised interest rates, which brought that differential back in line. Simultaneously, we did not get the tariffs, which now we're seeing bond yields fall. So as those bond yields fall, UUP ETF is going to continue to lower to a certain point. Once the quants get those numbers sort of where they need them, when they say, okay, the Bank of Japan isn't going to go any further, let's get back in. Canada, they're going to have to lower, so let's get back in. That will happen. You will see this particular ETF, UUP ETF, bottoming out. Probably got maybe a buck or two left. We'll see how far it dips. But once those tariffs kick in, UUP ETF will push higher. It will follow, keep an eye on the US 10-year Treasury bond. So we're pulling all these 3 points together. The 10-year Treasury will be the thing that spikes up first. The FX markets are going to jump all in on this. If, for me, the way I'm going to be looking at this, UUP ETF, I'm hoping we see kind of a move lower here, maybe about $2.50. Then I'll start buying calls, and I'll probably also start selling puts. It's a little more savvy, and I can take the risk because I have that kind of positioning available. We'll call it that. I'll sell puts, bring in some premium. I'll buy those calls, paying that premium. So it's called a risk reversal within the FX world. They're called different things in different communities. I have always known them as risk reversals. And that's what I'll be putting on. Sell those puts, buy the calls, wait for the tariffs to hit. As soon as they hit, bond yields spike, the dollar spikes. At the same time, I'm going to be looking at USO ETF, continually buying on any kind of dips that we see. And I do think we're probably going to slide just a little bit lower. But I think a lot of market participants are getting ready for that clock to tick out. And any kind of moves downward in some of these ETFs and financial instruments would be, listen, we're probably not going to get any lower than that. The fundamentals themselves, regardless of the tariffs, support certain instruments at these levels. Then when he puts these tariffs on, they spike higher. This is the strategy I'm playing out. I'm looking to really kind of, my portfolio strategy is looking at these things in this direction. Trump will put these on because he's effectively making money off of Americans every gallon at the pump. The strings are sort of being pulled. You can see how lines are being connected and what's really going on. And you can sit there and ask a question regarding Canada all day long. Why Canada? Really? There's border security issues? There's fentanyl? Less than 1%. It's like a 0.5% of fentanyl comes through Canada. So don't tell me it's anything like that. Border security, his 30-day moratorium, he said, this is what I want. Canada had already agreed to this under Biden. So nothing is new. So when you break this down, you realize it's nonsensical until you start looking in a different direction. You realize he's going to make some money. And for him, that's what it's all about. These are not my policies, but I will make money in the stock market based on policies. That's how I don't have a choice. That's what I'm going to be doing. I'm looking for portfolio strategies to make money in the stock market, and these are variables we're looking at. Make sure to hit that like and follow button. Make sure to catch my Substack newsletter if you want the written content on this and notification that I've put a video up and sort of a quick breakdown. The links are at the end of the video. We'll see you in the next video.